and they're trying to say, how do I pass the wealth without getting hammered by the 30 to 50%? So enter the Deferred Sales Trust. Sounds great, Seth. Yeah, so most commercial real estate owners, okay, they struggle with capital gains tax when they go to sell their highly appreciated multifamily, senior housing, primary home, business. And it's somewhere between 30 and 50% with depreciation recapture, depending on what state you're in. And we use a deferred sales trust to give them tax deferral, liquidity, diversification, and freedom to say goodbye to the 1031 exchange, get out of debt, put the funds in stocks, bonds, mutual funds of their choosing, or back into commercial real estate and whenever they want with no timing restrictions, all tax deferred. And so that they can create and preserve more wealth. From maybe the investor who's looking to approach it, they struggle with attracting wealth sometimes to actually buy these deals. So this is a great way for the syndicator as well to attract high net worth wealth through the business sales, primary homes. A couple stats for you. According to the American Bankers Association, Seth, there's about $17 trillion that will pass from one generation to the next in the next 20 years. And this is known as the baby boomer generation. And in fact, there's about 77 million in the US alone, and about 10,000 turn 65 every single day. And they've made their wealth. These are our parents, Seth, right? They've worked for 20, 30, 40, 50 years. And they've made their wealth, a lot of it in commercial real estate. In fact, 50% of America's net worth is tied to high-end primary homes, commercial real estate, and private equity, which is businesses. And this baby boomer generation is the majority of that wealth. And so they're trying to figure out a way, how do I finally retire from the toilets, the trash, the liability, the management? How do I relieve all that debt? You know, they went through the 08 crisis where things really, some of them lost everything, right? Some of them were close to losing a lot. And because of that debt and because of over leveraging, because of doing the 1031 exchanges. So they're tired of that. They're now 11 years older and they're trying to say, how do I pass the wealth without getting hammered by the 30 to 50%? So enter the Deferred Sales Trust. We solve that because they can be completely passive. They can be debt-free from their real estate. And then what's cool is they can actually invest with other syndicators and operators around and diversify their actual assets. Most 1031 exchanges, the whole entity must move, okay? So the 1031 is great. I still do 1031 exchanges. I love them, but I love them best when the marketplace is low, when the marketplace has a good buy-side opportunities, and also when the entity, the partnerships want to stay together. So the intent of the 1031 is tax deferral, but the biggest challenge has to do with timing and flexibility with partnerships, whereas the Deferred Sales Trust solves that. There's no timing at all. You can go whenever you want, tomorrow, day one, anyone, 5 years from now, or you can also separate a partnership. So each partners can go their separate ways. The other big one has to do with depreciation, okay? So some of these owners have owned properties for the life of let's say 27 and a half years for a multifamily or 39 years for commercial property, and they're fully depreciated. And one of the number one reasons, Seth, to own real estate is the depreciation that offsets the income, right? So you actually get higher income and less taxes. The challenge is when you sell in a 1031 exchange, the depreciation schedule travels, which means, Seth, you have to buy a bigger property and perhaps take on more debt, right, to perfect the exchange. Therefore, you take on more risk. The solution is the Deferred Sales Trust. We actually, at close, we pay off all the debt, and then when you direct the funds whenever you want to, you get a brand new depreciation schedule. So this is very powerful, a counter to that. So hopefully that makes sense.